Hi, my name is Michael, and I am the founder guy here at backtothefuturetrading.com. And I want to give you a brief synopsis of what we're going to be going over in the Online Trader Central event here, featuring our software in a powerful combination with a synergistic ally, the Oil Trading Group, featuring Jason Love. W.D. Gann is perhaps one of the most influential, if not one of the most profitable traders in the history of trading. And at the end of his career, when he looked back and began to train other people with regards to what he had learned, he had this to say: time is the most important factor in determining market movements. By studying the past records of the averages, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. Here's where things get interesting. He obviously feels that time is an important, if not the critical factor to his success. But he brings alongside this second element, the element of price. And he wants to make it very clear to you and I today that combining timing with price, support and resistance, was the key element, that synergy that made everything possible for him. Now, let me show you a little bit about what we're going to talk about during our event and how time and price are relevant to you today, 100 years after he taught this technique. This morning, before the market opened, I had these times on my chart for crude futures. It's a 3-minute crude futures chart. And what you can see here below is that I've asked a computer to go back in time and tell me the times where the market is most likely to go up based on past bank behaviors. See, banks have a weakness that people don't know about. The weakness is when they move, it generates a pivot at a certain time. Most traders are focused on price action and never focus on time, which allows the banks to continue to perpetuate their scam. So this morning we knew when these times were going to arrive. We had a high degree of confidence that 10:03, for example, would be a selling pressure time. 12:33 as well, 2:30 and 3:06 Eastern time, all selling pressure times, and all these times on the bottom were buying pressure times. So we knew this going in using an element of time derived from a high strength institutional grade algorithm. But remember, Gann said we needed the element of price as well. And here's where we combine forces with Jason Love of the Oil Trading Group. Let me show you what I've got. Today, before crude opened, we had these levels right at the pit open. This is 9 o'clock Eastern time. And so you'll see these levels here. Consider them a ladder. This is a guidebook as to where price will go once these levels are broken or touched. But again, we don't know when the moves will occur. Remember, just a second ago, though, we had something telling us when to look for these moves. So as of 9 o'clock, we were underneath the DS mid. We had not closed above it, and we were just kind of floating here with no timing signals to work with. Do we go short? Do we wait to go long? What do we do, and when do we do it? Now watch what happens when we reintroduce Gann and combine time and price. 10:03 arrives, and it's a selling pressure signal. Selling pressure signal above support. So we don't have permission to do anything until what? We see it close below. We know we have a selling pressure window. We know what weakness will look like. And so as the market progresses, we finally see a settlement here at the DS signal level. But watch. That's a pierce of the level. Think of that like sticking your finger through a piece of saran wrap and popping that membrane, or smashing a hole in some ice. There's weakness now. And so now one of the things we can do is the following. We can look at this and say, hey, how about a 10-tick stop from 83 to 93? Most people can tolerate a 10-tick stop on 2 lots. And what we're going to look for is target 1 to the DS target, and then target 2 to the extended target. Remember, we have a timing window. We know how long this trade has to work as well, because remember from our earlier segment, we know all the times in advance. And so as the market progresses, we move closer and closer down. It moves up and then slams through the first target. The second target is missed by a tick and then eventually touched and crushed. So this timing element gives us an area to look for. The price element gives us an area to watch for punctures, to watch for closes above or below. And then this ladder of price developed by Jason Love at the Oil Trading Group gives us the ability to project where price should go with reasonable risk-reward ratios. So remember, if you had risked 10 ticks in that first setup, waiting for that appropriate time and direction, your first target was 18 ticks down, and then your second target was 40 ticks down. So that's nearly a 4-to-1 RR on the first contract. But remember, we have additional times in the future. As we came up to the next time here at 11:30, watch and see what happens. We're hitting our head on resistance. 1, 2, 3, 4 candles. But now we have the time to watch for. And 11:30 comes, 3 minutes goes by, and we're unable to close above it. So no permission. We continue to go forward in time, and now watch what happens. This candle closes above the DS midline. However, the closing price is way above here. Way above this level, rather. So now the risk-reward ratio to the next level is a pretty small target. If we risk 10 ticks to make 3, that's not a reasonable or responsible RR level. So we know that the window lasts from 11:30 to 12:30, and here's what we can do. The next candle closes above the DS signal line right here at 57.27. We look for a 10 tick stop underneath. There's 17 ticks on the 2 lots. Now remember what we're going for? We're going for a first target, and then we're going for a second target, and we know exactly how long we have to go in that direction before the move has the potential to reverse against us. So if we had entered at this price here, which closes above the DS signal line, we have that first target level here for an 18 tick winner, and then the second target at the extended line for 38. So when you combine time and price together, we've taken 2 of the elements that most traders deal with away. The fear of knowing how long a move should last, and the fear of knowing where the move will start. And so at the end of the day, we see when we compress all the signals together that we have the expected moves at these times, but when we combine time and price together, we have a rifle scope. The vertical line of the rifle scope is time. We know when to start looking for the move. The horizontal line of the rifle scope is price. It tells us what levels need to be breached for the move to continue up to the next rung or down to the next rung off of these very powerful market maker levels. Remember, everything we're talking about is a predictive tool. You can see here where we are currently. It's the after market time, 5 o'clock p.m., and we already have the times out to the right for the Asian session, moving into the London session of CL in the overnight. For now, we already know where the levels are going to be using the powerful OTG market maker levels. So it's a question of waiting for the right time, not having stress, watching for the action that we want, and deploying responsible risk-reward ratios anywhere from 2-to-1 to 4-to-1 so that we keep our stops small and we keep our targets large, and that's the way to win. Do me a favor, take 1 second, go down below this video, register for the event. We are an educational company, not a sales and market organization. I promise you're going to learn something. Register now. We can't wait to see you for this exciting Online Trader Central event, the intersection, the collision of time and price. Take care, everyone.